Welcome to the latest Evershed Sutherland Legal Insights podcast.
Hello, I'm Matthew Allen, Global Head of Financial Services at Evershed Sutherland. Welcome to the latest in a series of podcasts exploring trends and opportunities in global financial markets in 2025. In this series, we'll be hearing from our clients and industry observers on a range of hot topic issues, which our own lawyers and partners on both sides of the Atlantic will then reflect on in a sister podcast. Today, we'll be looking at what is happening in the world of regulatory change and regulatory fragmentation, a small topic. And to help us do this, I'm delighted to be joined by Brendan Reilly, who serves as US Head of Corporate and Regulatory Affairs and Public Policy at Barclays. Brendan, welcome. Thank you very much indeed for agreeing to tackle this enormous beast of a subject. Maybe you could just start by telling the listeners a little bit about yourself, your personal background, and your roles and responsibilities at Barclays.
Yeah, thanks, Matt, and thank you for having me today. And I imagine most of your listeners are somewhat familiar with some of the hats you wear, but I also appreciate the role you play with the City UK and the Market Advisory Group. And you and I have had the opportunity to engage on some of the issues we'll chat about today and to visit policymakers, which I think is one big message that's very important, which is facilitating credible and constructive dialogue. And I'd like to think, to your question, my own role, I currently run corporate affairs at Barclays, and my background is more in the strategic policy field of dealing with supervisors and regulators, as well as elected officials. But I've also taken on a broader remit and worked with some of our colleagues in corporate communications and citizenship, events, sustainability, and a few other pockets. So it really sort of is an external facing role, and it's been obviously an interesting time given the focus on policy and politics globally at this stage of the game. I will caveat that, Matt, as you know, I'm obviously at a transatlantic bank, and I've worked at a couple global financial services firms and in government myself. But most of the views you'll hear from me today and the insights are my own views. I just always heavily caveat that as well.
No, understood. And look, let's start with that big picture. We're 8 months or so into Trump 2.0. Lots going on for sure. What are your reflections on that journey in terms of the regulatory agenda, or more broadly, and what's been accomplished thus far, and what are the kind of key themes that you're kind of watching in the period ahead?
Yeah, it's a really good question. It's a great starting place. Obviously, it's been very busy with a lot of activity. I will say, when I step back, I'm very optimistic for a couple reasons. The first being, we just saw, and I'm sure we'll chat about it more, a very positive state visit between the US and UK, in which I think the special relationship between the two countries and the leaders of both nations was on full display. And I think the second reason is, through that, I think there's tremendous opportunities to engage and to really deepen those ties and deepen the commonality, and just increase dialogue. So I think, as I said earlier, that's just such a key component. So for those reasons, I'm really optimistic. I think when I look at your question and think about it some more, the first observation, as I said, it's a very active agenda. And I think the administration has been very successful in delivering on it. Objectively speaking, the president is executing on many of his priorities. I think the second comment that comes to my mind is, the focus, the word and the focus has been change. And we're seeing a lot of focus in several material policy areas. And so a lot of change. And stepping back, at the same time, we're seeing societal change, and we're seeing change in the use of technology. And so it's really interesting. All of this is occurring sort of at the same time. And when I think about the agenda, I often think that, Washington is inherently defined by process and people and content. And I also think about it as a matter of, who are the people, what is the focal points of the agenda, and how is it being executed? And I think the focus has largely been on the same series of issues that we're seeing, which is foreign policy, trade, immigration. Certainly in the last 24 hours, we've seen some more on healthcare in a couple different contexts, as well as some more micro level areas, which is focus on fiscal items, the Federal Reserve, smart regulation. And like I said, technology is sort of the overlay of all of those different issue sets. And it's all together leading to a lot of change all at once. In terms of the how, I would also just say that, we're seeing a lot of activity via executive actions, and that's become more so the norm in recent years. I think there's been 200 plus executive orders since inauguration. So a lot of activity is actually moving right into action in real time. And the things that we're watching, just to sort of conclude here, I would say the first thing is obviously, as we're seeing in the US, it's the fiscal issues. So I think many folks and observers are hopeful that the shutdown that has just begun overnight is relatively short. But I think fiscal matters, spending, the implementation of the One Big Beautiful Bill, that was certainly very much a bright spot that the administration was able to get its big tax and spending priority, its reconciliation package done, no small feat. We're watching whether or not there's a second tax bill. And then also on fiscal, we're watching some of the trade issues and tariffs and how much those sort of contribute to revenue. The second area, as I mentioned, is really foreign policy, and those issues are a major focus of global policymakers, also of markets and market participants. So that's everything from what we're seeing in the Middle East to discussions on Russia, Ukraine, and then certainly China policy. I would say the third area here is trade. And obviously a lot of discussions continue to go on trade. As well as, given all the executive actions in this context, there's a large focus on the courts. And I think there's a question about the durability of change and how courts, where there are legal challenges, ultimately interpret parts of policy. And trade is definitely something that is on that in focus of the Supreme Court in the coming weeks here as well. And then lastly, like I said, the Federal Reserve, and that's literally everything from monetary policy to regulation. And I would just say smart regulation is a focus of all sectors. It's definitely part of the administration's pro-growth agenda. So I hope that frames it a little bit. I think, like yourself, who works a lot with clients, I think everyone is trying to understand and navigate this. And that's something that we as a firm are spending a lot of time in doing, and having conversations with policymakers and understanding the agenda. And I do think finance plays a really big part in capturing many of the opportunities that are in front of us across sectors and across regions.
Brendan, a tour de force there, and I could probably do about 10 different podcasts with you on what you've just covered, but did promise the readers that we'd kind of zone in on the kind of regulatory reform issues. And you've touched on that a little bit in terms of, bank regulation, smart proportionate regulation. There's been, I think some quite encouraging and quite, seem to me at least, well-balanced speeches from the Federal Reserve on this, and, not a one-size-fits-all approach and all of these different things. And of course, there's been a shakedown in terms of new personnel and so on. So, where do you see the arc of future activity in terms of bank regulation in particular, and what might emerge, later this fall and as we move into 2026?
I think your comment and your observation is spot on, and I think the couple framing comments I would make here is first, the leadership team that we're seeing at the agencies and departments in this space, in the financial services space, is very experienced, and they're also very focused on growth, on markets and lending and investing, and in innovation. They're also very aligned. In the US, we have a lot of different regulators across that so-called FSOC table: banking agencies, market regulators, treasury, and others. And we're seeing really alignments on that goal of growth in markets and innovation. I think the second observation is that I do think that when you step back from it, the timing is probably right as well. We've seen 15 years of sort of post-crisis reforms, and objectively speaking, I think most policymakers would suggest that the resilience in the system, particularly for banks, is quite high, and a lot of financial institutions have made tremendous progress in relation to risk management, compliance, and lots of other key areas. And at the same time, I think there's a need for a refresh and review of parts of the rule book, and that's what we're hearing and seeing in the U.S. and even from global policymakers. And part of that, Matt, is the fact that a lot of the rules today are backed by a premise and written in their rationale as practices that were observed in 2008. And since then, we've obviously seen, particularly in recent years, a lot of new markets and a lot of new market participants, and questions about where policy should sit, where risk should sit, should things be in or out of the banking sector. And this is a healthy time, I think, to sort of reflect on that and review it. So I would just, as I think about this, some of the things we're watching is very pronounced. The first thing is definitely the review of capital, and that's a big bucket. I think a lot of the focus is on the Basel Endgame and the U.S. completing its work there, but we've heard from U.S. regulators their desire to look at capital holistically, and so not just Basel and the risk-based standards, but stress testing, leverage requirements, things like TLAC and long-term debt, and even some of the positioning of capital and resolution plans. So I think you'll probably see, an approach to Basel that is perhaps a little bit more capital neutral and factors all these other items in a more cohesive way. I think you'll see perhaps more transparency around stress testing and things like that. And I also believe that while there is so much of a discussion on capital and the Basel Endgame is the next big thing, I also think it's important to remember that there's lots of enhanced prudential standards coming out of the crisis. Capital is an important one, but you have liquidity, you have supervision, resolution planning, lots of areas. The other thing I would just say, the second item is I think you're going to see more tailoring of regulation, and that includes tailoring it to the risk profile of a type of business model or size or of institution, as well as to the structure of it. And that's not insignificant, say, for regional banks that have, like I said, a different structure of business model, or even foreign banks operating in the U.S. that operate in a ring-fenced sub-consolidated subsidiary that have very different attributes. So a lot of these rules are intended for global entities, and applying them to a subsidiary requires a little bit more consideration to that structure. And then lastly, just a lot of discussion on reforming supervision and focusing more on material risks. That's another area that's been on the agenda that's been discussed. And final is really, as I mentioned, and we've talked about many times, the ecosystem and how that's changing and the focus on innovation. And what does the system look like for not only banks, but for non-banks as well? And in the US, there are very deep and liquid capital markets. Barclays is very proud and pleased to be a part of those as a liquidity provider and a catalyst there. But how do you fund a $30 trillion US economy? And you need lots of players in that ecosystem to devote balance sheet to invest. So what's the right structural foundation for rules to sort of balance the safety and soundness and the growth agenda and the capital markets desire here in the United States?
Yeah, again, there's a lot there, and I like your points around, kind of reflecting on it. Does feel as though we've spent a lot of time accreting more and more protection since the financial crisis, and it's time to look afresh at that, and also how the non-bank world, right, has obviously subsisted in a very different environment. So again, I could do another 10 podcasts with you on that subject. Maybe we will. But look, I just want to sort of move it on a little bit more into the market space.
Sure.
And again, lots of activity going on there. Probably, digital assets. You can't get away from that. And of course, that's a broad church in itself. It sort of conflates often, obviously the crypto world, in terms of the speculation component, the stable coin environment and the payments. But then, what goes under the radar often, but I think he's, talking to you and talking to other clients, that the wholesale tokenization space and what's possible there. So, what do you see as sort of the lower hanging fruit or the issues that are going to come through in this next period in terms of market regulation? And sorry, without trying to kind of pre-position the answer, in particular in that digital asset space.
It's a great question. And I think as listeners hear you speak, you can tell how much time you've spent on these issues, which is fantastic. I know we've had a lot of conversations and have really appreciated your viewpoint in trying to organize the industry to sort of think about these things in a more cohesive and global way. It's been really greatly appreciated, if I could just say that. When I think about the agenda, you're right. It is the digital assets component, and I'll come back to that very quickly. But I do think, like I said, in that focus on growth in markets and also innovation is really smart regulation. And so you're seeing the market agencies look at what is the most effective and efficient regulation to ensure market liquidity, to ensure capital raising. And that includes, a review of debt and equity markets, public and private markets, and what is working and what could be improved upon and less burdensome. And I think it also includes, as you're seeing, Matt, more openness to new products and also, also investments. There's another piece there about this, we've talked about access to markets and sort of the democratization of private markets. So that's another sort of focal point we're seeing in the US. And I think the other thing that we're seeing is on the processes, and this goes back to my opening comment, you're seeing a lot of collaboration and solicitation from stakeholders, and whether it's market participants or end users. So I think the SEC has done something like 10 or so roundtables and lots of concept releases on everything from securitization rules, Reg AD, to foreign private issuers and things of that nature, and a lot more interagency coordination, not just at that FSOC level, but between the SEC and the CFTC. So that's, I think, for the market landscape as a whole. And then getting to your digital asset question, the space is moving very fast and much further. And I sort of think of it in two or three ways. To your comment, there's lots of components, but I think most of the activity at onset, including in Congress, was on like sort of the global payments landscape. And we're seeing a ton of innovation there. That's been a central focus, not only in the US, but of multilateral forums, the UK, the EU, APAC. Obviously, the Genius Act in the US, which is being implemented, is something we're watching, and how the Treasury and the banking agencies and other regulators approach that. I think the second thing is really, the new forms of digital money, as you touch on, tokenization, tokenized deposits, et cetera. It's increasingly moved from exploration and pilots to like real implementation and greater use of use cases in the ecosystem, and maybe even bridging from traditional and decentralized finance. But I also think there's still, this would be my sort of third comment here. I guess there's still a learning curve and a gap here, and there's still some complexity about not only understanding the instruments and the technology, but also the process in the market, as well as the process around governing and the shifting policy. And there's still some questions, candidly, about AML and things of that nature. And so at the end of this, I think it really necessitates a more comprehensive approach and more collaboration between the public and private sectors, joint consultations, not only in the US, but perhaps globally with relevant authorities. So that's what we're really seeing, with the Fed, the FDIC, the SEC, really opening those channels. And I do think we also hear a lot about innovation, and that's extremely important. But also, I think there's also a desire to understand why the current ecosystem exists the way it does, why certain structures have developed over years and decades. And that could be potentially for fin crime reasons, that could be for liquidity in markets, having intermediators provide liquidity in all types of markets. And this is going to be a big priority, not only in the US, but globally, to sort of create global discussions. And I think next year, Matt, will be a very big year for actual execution on this. So if it's not moving far and fast now, it's going to move even further and faster, perhaps next year.
Well, maybe we'll do another podcast on that as well in due course, but that is really helpful. Thanks. And you touched on the international dimension. So then kind of extrapolating that out, and there's been a lot of concern, I suppose, about the US retrenching from some of the multilateral fora, or at least approaching those forums with a little bit more circumspection, if that's the right word. So just give us a little flavor of how you see this playing out, in terms of the international piece with respect to the multilateral piece, but then also in some of the bilateral relationships. You touched on the special relationship earlier, and obviously the US-UK corridor in terms of financial services is very, very significant. So thoughts on all of that?
Yeah, it's great question. I would say a couple things. And my first comment is, I think perhaps your listeners will have seen during the spring World Bank IMF, and we're coming up on a fall one. Certainly the US, there's a lot of discussion of America first, but you saw a very senior US official talk about how America first in this context is not America alone. And I think you're seeing the Treasury and and Fed, you're seeing officials there take on global roles at the Financial Stability Board and engaging in the process, which is very positive. And I also think U.S. officials are very mindful of, if change is created in the U.S., how could that be extrapolated globally as well as made more durable and consistent? So I think there's a lot of opportunity for the U.S. and UK to align on that, and there's more collaboration going on. The second is, I do think there's also an opportunity to think about market fragmentation, and you're probably familiar that a lot of global financial institutions have been worried about divergent approaches across the globe on regulation more broadly, on capital or Basel, or just inconsistent compliance regimes. And the next phase of that could be the sort of emerging tech and digital finance space, as I said just previously. So making sure that there's discussion there. And then I think also globally, it'll be an interesting time because the US takes over the G20 presidency, I believe, next year, and how it approaches smart regulation and in the US, but then the agenda there could be something interesting to watch if it uses the G20 presidency to inform global discussions. But to the second part of your question, I continue to believe there's tremendous opportunity between the US and UK, and it's if you looked at that visit, and I think it's a credit to both countries and both governments. I think there's a lot of alignment in the discussion in the priorities of facilitating growth and investment, and that's from the tech to the financial services sectors. It spans trade, financial regulation, defense, tech. How can we enable more cross-border investment and innovation? And I think the areas that we're really watching coming out of that is twofold. It's the new US-UK tech and trade partnership, which was a big win to get, in a focus on AI and data, cloud services, market access, tokenization, things of that nature. And then the second was specifically on financial services. And I know you're going to, the leadership role I mentioned, you're playing a role in bringing the group together to think about this. And it's the facilitation of, I guess, twofold in this bucket. One is digital assets and frameworks, and two is capital markets and potential regulatory pairing, where both treasuries will come together and co-lead an effort to talk about reforms and policies over the course of the next half a year that could really facilitate that capital formation, that regulatory and supervisory coordination, and really seize on that innovation. So I'm exceptionally optimistic. That's where I started on this, about that opportunity to to come together and to promote global and local growth in these endeavors. And I do think that I would encourage people to engage with policymakers on these exercises bilaterally and multilaterally, because there's just a huge opportunity at this stage in the game.
Brendan, thanks very much indeed for joining us today. I love spending time talking to you. It's always incredibly thought-provoking and insightful, and I have no doubt that our listeners have enjoyed it just as much as I have. And thank you, of course, to the listeners for joining us as always. If you'd like to know more about any of the issues we've been discussing today, or how Barclays can help you navigate and profit from all this complexity in the United States and globally, I'm sure Brendan and his colleagues will be delighted to hear from you. So please don't hesitate to get in touch, and we can pass on contact details if that would be helpful. Please also look out for the next podcast in this series with Evershed Sutherland Partners, reflecting on what Brendan has shared with us today. Good luck to them on that. That show will appear on all our usual social media channels in the very near future. Thank you.
Thank you for listening to the Evershed Sutherland Legal Insights podcast.